Fannie Mae is going to be removing their minimum credit score requirements as of the 16th of November. I've been getting a lot of phone calls asking for what my opinion is. That is the purpose of the video. You guys buckle in and don't forget, let me know what you think as well. Let's go.
Okay, you guys, so let's talk about the whole, Fannie Mae 620 credit score dropping situation. Because if you're really paying attention, this type of decision didn't come out of nowhere. First of all, the government is shut down, as we know. And anytime this happens, the housing market slows down, money gets tight, people start buying, and lenders start panicking because the loan volume starts to drop. So what do when the market slows down? They loosen the belt. They start making it easier to qualify, not out of kindness, but out of necessity. Because when less people can afford homes, the whole system starts to feel it. From banks to realtors to construction. So now Fannie Mae is like, okay, let's open our credit score rules to 500s instead of just having a 620, the 620 credit score, because we need to keep operating. We need to keep going. We need to keep this machine running. The housing market is the economy. When buyers buy, lenders lend, and builders build, the money just circulates. So they're loosening credit rules to stimulate spending, get people who were isolated out of the game back in the game. But now we're talking about inflation. Now inflation is going to get a little nudge, which is already, killing the economy. Because when more people can qualify for loans, prices start increasing again. Mind you, we're already in a fragile economy. Anyway, it'll help people who have been locked out of home ownership finally get a shot. More approvals, more movement, more deals. My question is this short term, or is this just stop the housing market from freezing up? Now, the thing is, if there's too many risky buyers, we can end up back in a 2008 style correction again. This is when people buy high and they lose their homes because either rates got too high and or the job market started slowing down. So technically it's a blessing and a warning. So in short, the economy is not as stable at all, no matter how they want to make it look. And too, opportunity always shows up in the middle of chaos. So if your credit score is low but your cash flow is good, you need to jump on this while you can. Don't wait until the lenders tighten back up, because I'm sure this won't stay open forever. Y'all wanted transparency? That's it.
Let me say thank you to the young lady. She always gives a very even-keeled, under control, not real emotional synopsis on issues. That's why I chose her again. Her video will be in the description so you can follow her channel if you like to. Unlike a lot of other folks that hit you with a lot of emotion, and that's why I made that statement. Buying a home is an emotional process. As professionals, I feel like what we should do is not take away the emotions, but we got to get you to see things logically. Did a video yesterday where the administration also came out with William Pulte saying, or speaking about a 50-year mortgage. You can watch that video here if you want, but that's not a good thing either for the people that would entice, that would be attracted to those types of things. What I don't agree with her on is, this is not 2008. I was in the game. I was in this business in 2008. First of all, we have nowhere near the amount of unemployment rate that was happening at that time. Number two, the loan types that were spread out, not just in the United States, but across the Western world, the systemic risk, the credit risk was through the roof. That's what caused 2008. And that was in part of the rating agencies winking an eye at garbage loans that did not have to verify income, number one, and credit scores. There was no such things. People were literally able to state their income. Couple that with a lot of adjustable rate mortgages with people with questionable credit scores are attracted to. They were 228s, 327s. They had a certain fixed period, right? And then they would adjustable. Not anything along the lines of a buy down that you hear about today. Like a lot of folks that try to tell you buy downs are the same. They're not. But I said all that to say, we're not in that situation. So don't let a salesperson get you frothed up about possibly missing out, FOMO. You have to stay logical. And the deal is, back to the video, if your credit scores were below 620, which is on a scale of A, B, C, that's bad credit. Doesn't mean that you're a bad person, but it's bad credit. The question is why. Now, who this may help, in my opinion, is if you're someone who has had medical collections, maybe you had a big surgery or something of that nature, and you have a lot of medical collections that you're not going to deal with. And because of that, your score doesn't rise. It'll help you. If you truly were a victim of identity theft, not this pencil whipping that some of us like to do, but you can document and it was the case, it might help you. Those are two instances where this might help, because what a lot of these folks aren't saying is we've always took a holistic picture, and even Fannie Mae, when it comes to the documentation as lenders, in order to sell it to the end investor, they're still going to want to see a credit report. The underwriting proprietary system is just not going to look at it going forward or after the 16th. But what is better information to glean if someone is going to pay you back is your bank statements. Go and look at the bank statements, because if you can pay, you'll stay. But if you can't, you won't. So bank statements, and then your credit depth, how long you've been in file. All of the things that make a good credit profile are still in place. Your income, your inquiries, your utilization of revolving credit. Are you a transactor or a revolver? Are all your limits high? Not 30%, but 10% or less, preferably zero, especially when you have challenged credit. Sounds like I'm being a Debbie Downer or a David Downer for all of you out there that are sensitive. I did a male and a female name, okay? I'm not. It possibly can open up the door for more people, but we're not going back to the Wild West, because Dodd-Frank and the qualified mortgage is still in place. The investor must be made whole. I'm not trying to poo-poo on things. I'm answering the question, not from a sensationalism standpoint, but one from a professional standpoint of someone that has been in the business. I digress. One other good thing about this that they didn't really say, but they will start taking into account your rental history. A lot of you guys out there that have challenged credit have prior broken leases and things of that nature. These are things that you need to take care of before you jump off the porch, in essence. Shout out to her. She's very well, she's even keeled, okay? And doesn't make things sound too sensationalized. Now, this next video is the opposite. Let's check this out and see how you guys feel about this.
Fannie Mae may have just changed the game. Actually, they changed the game. They changed the game. Up until now, you've needed a 620 minimum to purchase a home with the Fannie Mae. Now, you can purchase a home with no minimum credit score. The DU allows direct underwriting to look at the underwriter will look at your whole profile, how long you've been on your job, how much savings you got, how credit work, all your credit profile. They're going to look at everything together, and they're going to basically approve you for a home. That's what I'm thinking, you know what I'm saying? Why else would they remove it, So you're like, ooh, but the interest rate is high. They always gonna be high. They always been high. It's every now and then they get low. You can refinance. It's okay. Go get you a house. But I don't want to worry about cutting the grass. I don't want to worry about, I can barely afford my rent. Okay, barely afford your mortgage. That's fine. At least it's yours. At least you own it. At least you're building equity. Now, there's a lot of things I want to tell you about purchasing a home, owning a home. I ain't gonna lie to you. Yeah, it ain't that easy. But if your credit score was an issue and you've always wanted to purchase a home, I think right now is a good time for you to look into it. Now, I will say, they say everything that glitter ain't gold, and they say when it sounds too good to be true, it might be too good to be true. So what I'm going to tell you is back in 2008, when the world came crashing down and we were in a big recession and everybody was losing their houses and foreclosing, it was because they were getting homes and approved for loans that they could not afford. And it was not similar to this, but it was real close to just what's happening with Fannie Mae and them. Because Fannie Mae run the game, dog. So when Fannie Mae do this, watch how many lenders and everybody be able to do the same thing. I'm trying to tell you something. Listen, it might be too good to be true, but whoop-de-doo. Let's get on in the house. Let's get in the house.
Great salesman, very entertaining, but this is the mindset that you want to stay away from when you hear headlines like this. Again, nothing against the gentleman, don't know him. I'm sure he's putting on for the platform that he's on to get views. But when you get ready to purchase a home, just to summarize things, you need to know your numbers, okay? None of us from online or even locally, wherever you are, somebody that you could press the flesh with should be able to tell you that you're ready to buy a house. I speak to a lot of younger folks, a lot of single ladies, and I feel that they feel pressure to do something. And so I always want to make sure that people understand, because this is the largest transaction that most adults will get into in their adult life. And so you need to understand what you're getting into, from the monthly payment to the portion of the payment that can and will go up over time, to the maintenance of the home. All those things need to be understood up front so that when you get into the situation, you can handle it. You won't be shocked because you let, a headline get you to buy a house. This is not a bag of potato chips. What do you guys think? Again, get down in the comment section. Do you think it's a good idea to remove the credit scores? Do you agree with what I'm saying? Do you agree with this gentleman or the first lady was saying on the video? That's why I do the videos. I want to hear what you guys think on the matter. And I thank you in advance. Oh yeah, remember, just do so respectfully. If you're someone that is ready, but you want to explore your options and you're looking for a lender that can do that for you, I'd like to throw my name in the hat. My contact information is in the description of this video below. You can schedule a consultation call and we can see if there is a fit. So there you have it. My time is up, but I thank you for yours. As I always say, guys, let's be good to one another. Let us let grace abound. Before you get out of here, check out these 2 videos. And until the next time, indeed, y'all stay blessed.